All right, guys, back to work tonight, Thursday evening already. One more day left this week. We're getting ready for Friday's trading session. We got quad witching only a couple hours away. Got a lot of great trades setting up for tomorrow. I want to make sure you know where the best setups are. That way you get a game plan to make some money tomorrow. Before we jump in, though, got a lot we're going to cover here tonight in a very important video newsletter. Before we get this party going, though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoyed this video, do me a favor. Will you hit that like button? I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's make some money on Quad Witching Friday. Where are the best trades setting up to finish off this week here firmly in the green? Well, of course, as you can see here, everything is bearish right now. Nasdaq is bearish. S&P is bearish. Crude oil is bearish. You know, right now, bear long-term trend, short-term bear trend. We're looking to short those pops right now. Everybody's looking to sell the bounces right now. I do have a couple different reversal patterns, some double bottom reversals, some 1, 2, 3 reversals. So I do have some buy side trades on my radar for tomorrow, but I think the most important thing as we go into Quad Witching Friday, looking at the charts tonight, there are really 3 different reasons why tomorrow may be one of the more difficult days of the week. It looks like there's going to be a lot of traps out there for tomorrow. And so we'll talk about tonight those 3 reasons why I see those potential traps. And most importantly, I'm going to give you a game plan to make sure you don't get caught up in those traps, to avoid losses, and of course, give you a roadmap to make some money off those potential head fakes and traps tomorrow. So I'm going to cover all 3 of those here tonight. We'll talk about why I think tomorrow might be one of the more challenging days of the week. And again, I'm going to give you a roadmap to make some money no matter what these markets throw at us here. Speaking of tomorrow, though, before we jump in, it's a pretty good idea here. We should get on the same page, right? Tomorrow is not your average Friday. Tomorrow, of course, is known as Quadruple Witching Friday. It's pretty simple. It's when all 4 asset classes expire. Generally speaking, when you think about a Quad Witching Friday, there is a bit of a self-fulfilling prophecy to it where traders kind of know it, generally speaking, is one of the more choppier times of the year. These, of course, will happen the 3rd week of every 3 months. So 3rd week or 3rd Friday of March, 3rd Friday of June, 3rd Friday of September, which of course is tomorrow, and the 3rd Friday of December. If somebody asked me how would you describe a quad witching, I would say lots of volatility, lots of volume, but not as much range. Lots of volatility, lots of volume, but not as much range, right? A lot of backfilling, back and forth. And again, this will be very characteristic of a quad witching Friday. That is one of the 3 reasons why I think tomorrow may be one of the more challenging days of the week. Lots of volatility, lots of volume going back and forth, but not a very big range. That is your typical quad witching. My best advice to all my students going into a Quad Witching Friday is to be patient and pick your spots. I'm going to talk about where my favorite trades are in tonight's video. That way you know kind of where I'll be looking for tomorrow morning in our trade room. Also, it's important to remember on a Quad Witching Friday, because of that kind of self-fulfilling prophecy, traders know it might be a bit more challenging. They may be easing off the gas pedal as we go into the weekend. Remember, trading is like riding a bicycle. It's easier when it's moving. So if things slow down late in the day tomorrow, back off a little bit, save your bullets, and we'll come back on Monday. So careful, careful, careful. Tomorrow is a day to be patient. Pick your spots wisely. Be careful pushing stuff too much towards the end of the day. Save those bullets. We'll come back for a big pre-Fed announcement week next week here on our video newsletter. In the meantime, though, back to our charts, though. The money, it's in the charts, right? Now, NASDAQ, S&P, crude oil, whether you trade one of these markets or you trade all of these like we do in our trade room, make sure you watch all the way to the end tonight because you'll learn something new throughout the entire video. I'm going to give you different trade ideas, different strategies, different tactics throughout the entire lesson tonight. And I do try to save the best stuff all the way to the end, so I'll give you a reason to stick around all the way to the finish. Why don't we go NASDAQ, S&P, And we'll wrap things up here on the mighty crude oil futures to finish up the video newsletter here tonight. Real quickly here, keep in mind a 4,000 tick chart on the Nasdaq. You can see all the time frames in the upper left-hand corner, and it's also pretty much assumed the Nasdaq and the S&P are very similar. So what I talk about on the Nasdaq can pretty much be applied to the S&P. The S&P can be applied to the Nasdaq. So these will be pretty interchangeable, and I'll do my best not to repeat myself too badly between these two markets. So let's jump right in. There are four key insights right now that are telling me where the best possible trades are going to be for tomorrow. The first one, of course, is this bear bias, right? Look at a daily chart right now. Look at a 4-hour chart, the overall bear bias, and you can clearly see we have a short-term bear momentum right now. Anytime I have a bear bias, I know my best trades, my biggest winning trades will usually be following that bearish direction. It's not to say we can't take long trades, but we know the odds are better if we stick to the short side, and I'll definitely show you a couple of those here tonight. Second thing here is a strong move down. We have a bunch of strong moves here. Anytime we see a strong move in one direction, we expect to get a pullback and a retest of that level. Once we get a retest of that level, do we bounce with a double bottom reversal, or do we break through for a breakout going lower? Second big clue here is a strong move down, and we know that anytime we see strong move, pull back, retest that low, do we break out and go lower, or do we bounce into a double bottom reversal? That's second clue. Third clue here is a wide bear channel. This is the second reason that I believe tomorrow might be one of the more difficult days of the week. Why would a wide bear channel be a little more difficult? Well, it's because of momentum. What you have to understand is that when channels are relatively narrow and relatively steep, we can be relatively aggressive, right? Off the highs there. I want to sell the high of a bear channel. When it's nice and narrow and nice and steep, we can pretty much throw all we want at the top of that channel and still make money. The problem is when these channels get wider, now what happens is now we have more momentum as the market runs higher. Now, why is that a problem? Well, because the stronger that move higher, if you recall, anytime we see a strong move in one direction, it opens the door right now. And I know we're very bearish overall, but if we see a strong move going higher, it opens the door for a reversal going higher. So I have to be aware of that, and I have to really kind of plan for what could be more potential for a reversal. Wide channels, big clue, is the second reason why I believe tomorrow may be a little more challenging. And then the fourth one is a support trend line. Now, why would a support trend line be on my radar right now? Well, think about what that means. If we do get that pullback, let's say, for example, we get that pullback going higher, I want to sell off the high of this bear channel. Trending markets, they love to use channels. You can probably already imagine, right? What's the problem? The problem is that trend line is a big issue, right? That trend line now is a line between me and going back to retest low. So really, there are a couple things we have to do on this. We have to either get high enough to sell so we have at least a little bit of profit before we reach that trend line, or we have to get underneath that trend line and try to use it as resistance. So that rising support trend line, and you'll see these across all three of these charts tonight, that is really the third reason why, assuming nothing changes, right? Now we'll talk about if something changes here tonight, but assuming this is what we get tomorrow, we may get more of those here tomorrow. Combine that with quad witching, combine that with this wide channel, add in that support trend line, and you've really got a lot of really ripe situation now for a bunch of head fakes and a bunch of traps. I also can see a possible range possibly forming here around that 12,000. We'll talk about that here in a moment. So the goal right now is sellers, right? The bears want to sell up around the highs. They want to sell up around the highs. They also want to sell up around these highs as well, right? Bears would love to take breakouts going lower. We got levels waiting below 817 in the Nasdaq, and then really all the way down to that 602 half level. So bears want to sell the bounces. Bears, of course, they want to sell the breakdown. What do the buyers want right now? The buyers want to buy the double bottom, right? They want to go back and retest that low. They want to buy that double bottom. Buyers would also have a great opportunity because of the size of the channel. There definitely is the opportunity for a reversal going higher, and buyers can probably look to pick off some pullbacks here before we run into those overhead levels and then look to dump it right back down again. So buyers definitely do have options, but they are obviously much fewer than the sellers here right now. So let's talk about this. The most important thing, whether it's here or down here, what I want you to think about in this is if we can get this pullback going higher, that trend line is going to be a problem. Again, I mentioned earlier, we have to either sell high enough or get underneath that trend line and use it. Let's talk about how do we sell high enough. It's a very easy process. What I want to do is, because I know momentum is strong because of the width of this channel, I have to anticipate now you're going to see a lot of buyers coming in and trying to punch this thing going higher, right? We've had a very bearish week so far. Eventually, the bears will dry up and the buyers will get that shot. Tomorrow definitely could be. There's no, for any day right now, this thing could pop and run higher. What I have to do is I have to trap in those buyers, right? For me to want to sell back down again, I have to trap in those buyers and really kind of use their exits against them. The trend line is the big variable here. The trend line tells me I got to sell as high as possible. And the best way to do that now is to sell up above a prior swing. Okay, this will be a two-try failure. Okay, I call these two-try failures. I wait for the price to pop up. Really deep pullback. Why? Because it's a big, big wide channel. As we pull back now, I want to see buyers try once. I want to see them try twice. Twice because of momentum, and then because of that trend line, that trap is what you want on that trend line, or that trap entry is what you want. This would be a two-try failure with a trap add-on, right? Which of course you guys have learned in that free trading course on our website, right? That is one way to do it. Let's say though, as we go higher, let's say we get a V top up here, right? Market peaks up, right? They come right back down. Look for that underneath, back up, and then finish off that move. That one's relatively easy. Every once in a while, what'll happen is the market will punch up. You'll get that kind of V top up there. You won't get that short off the high, right? What'll happen is the market will start to drop, and it won't pull back all the way to that trend line. And that's where another option is to grab that trap. Remember, we want to sell as high as we can sell, right? We're trying to go back down to retest the low. If I can get that two-try trap above, great. If not, I will gladly take it off the trend line. But if things start to roll lower here, that trap entry is very, very reliable as it tries to retest the low. Strong move down, right? Wants to retest that low. Does that make sense there? So sell it high, trap in those buyers to avoid the trend line, and then try to use that trend line as the resistance level on the other end. Now, what if we pop higher here? What if the market pops higher here? We pull back to the 21 moving average, and we jump off that moving average now. That is a reversal. If I can get a 1, 2, and really blast, right, coming off that moving average, like I mentioned earlier, I believe there'll be some money to make in the buy side here. I can mark off that high. I'm going to mark off a channel off that low. I'm going to drill down to my faster time frames, which you'll learn about in that free class I mentioned earlier, right? And I'm going to look for that trap below a prior swing, get underneath the moving average, look for bears to come in for that short, and I can use their stops as fuel for a failure pattern. Now remember, we've got to get into this before we take out these highs up here, okay? The window is very small for those buys off the low, but I really like the idea of a short-term 1, 2, 3 reversal and then grab that trap and that failure as we go back up to retest the high. Then from there, this is where the good stuff happens, right? Once we get up around those highs now, assume now we do get that run back to retest the high. Now we're at major resistance in a very long-term bear trend now. Now we look for the good stuff. Now we look for the buyers to come in who are not really seeing the chart correctly. Let the buyers come in. They're in too late, and let them now try to get in long up here. Once those buyers commit, now remember, at this point, this will be very bullish in the short term. So I want to use those buyers and use their stops. Right when we go back and retest these highs here tomorrow, if we can get all the way up to the highs here, look for those buyers to step in and try a couple times. Once they try a couple times, think about where their exits are. Think about where their pain is. Think about that stop run, and let's use those stops to our advantage, and we can look for that two-try failure coming back down. Now remember, your job is not over at this point. At this point now we got this market in free fall, trying to go back down to retest those lows. Now, find a new channel off that low, find a trend line off that low, find a channel off that high, and then repeat after me. First test is the best test. You want that trap, you want that failure, you want that pullback combination, all the same price action setups that we talk about and I teach you guys in that free trading course. Which reminds me, if you're one of the few folks here tonight who haven't taken that free class, if you haven't learned all the failures, the traps, the two-try rule, if you haven't learned that stuff yet, what are you waiting for? I'll put a link here for you in the upper right-hand corner. Grab that link. The strategy I teach in that free trading class right there, that will teach you how to find more winners, help you avoid some easy losses, and most importantly, the 3-step strategy you'll learn in that free course will give you a lot more confidence because of a roadmap to follow every day that you trade. That free class right there is perfect for someone trying to make the jump into full-time trading. I've got hundreds of examples of things like traps and failures as part of that free class. So definitely grab that link that popped up there. That way, the next time I say 1, 2, 3 reversal, find that first test to buy that first test off the low, and then of course that double top to try failure into new channel, you'll know exactly how to trade that on your own account, right? That's the scenario we're watching for as we go higher here. Now, what if we go lower, right? What if the market goes lower here? How do we sell it? What if we go sideways here right now? Okay, the sideways aspect of this, really not a lot of it changes. So if we do go sideways here overnight, right? Let's say we go sideways here overnight, and then we make that move going higher, right? At this point now, that trend line stays pretty much the same, a little bit different, and we pretty much have the same challenge once again. The challenge is, again, the size of the channel allows momentum to build, and that trend line means we want to again, try to sell as high as we possibly can. We want to let those buyers try once, let them try twice, and focus on that trap high for the entry going back down into that trading range. Or we want to get underneath that trend line and use it as well. So it's probably not going to be that big of a difference if we do get that range. Just be aware though, as the market pops up, I definitely want to use that two-try rule. Buyers try twice, and then depending on kind of where that trend line is, I got to really make sure I grab those trap entries. And again, you'll see a lot of examples of those inside that free class I mentioned earlier, right? For the entry signal there, and then grabbing that pullback off that trend line. All right, guys, that's if we go sideways here overnight. What if we go lower, right? What if we come down and keep going lower here? Can I buy it? Can I sell it as we go lower? Let's talk about that. Why don't we grab that over on the S&P. The S&P, of course, is very, very similar here to the NASDAQ. We have 4 basic rules right now on the ES. This is a 10,000 tick chart. That is the 21 EMA on this chart right now. 4 basic rules, 4 basic insights. One, of course, long-term bear bias. The odds are better to be a bear right now. Strong move down. Anytime we see a strong move, we expect what? A pullback, a retest, a breakout through it, or a bounce and going higher. We'll talk about that bounce here in a moment. Third clue here is a wide bear channel. Why is a wide bear channel important? Because as it rotates higher, I want to sell off the high. That's a lot of momentum now for the bulls, and it opens it up to be a really more difficult short off of that high. And then last but not least, possibly the biggest reason for some issues tomorrow are these rising support trend lines. We're probably going to see a couple of those more here tomorrow because tomorrow, again, is quad witching. Now, again, we're looking for that trend line, right, that tells us as we go up here, you want to see 1, you want to see 2, and grab those, right, and grab those traps or get underneath that trend line and use it as resistance. That's the basic idea here, right, as we go higher. And again, if we can pop up and hold, we do look for that 1, 2, 3 reversal, get that retest of that high, and then 1, 2 for that short back down into that channel, right? I apologize, repeating myself a little bit there, but I want to make sure you guys can see how that game plan is very, very similar. Now, as we go lower here, what do we do if it goes lower? In all reality, we almost hope it goes a bit lower, because then if it goes lower, what I can do is I can adjust these channels down. So if I strip this chart down a little bit here right now, imagine now the market now starts to go lower and we begin to get a more aggressive channel. This is where things get better for us, because in all reality, if I can draw a steeper trend line and then pin that thing up around the highs, now you've got a lot more aggressive channel to work with, and we can be, by definition, a lot more aggressive with our entries going short. Does that make sense, right? So the wider, the flatter the channel is, the more you've got to wait to time your entries, be a little more patient. If I can get, for example, let's say the market goes lower here, right, and I'm finding a much bigger channel, right, coming down overhead here. If we've got this market now running lower, right, now what I can do is I can now look for just your straight failures, right? So a stronger move down, narrower channel coming down, I now can look to get up, get above that moving average, and instead of looking for a 2-try failure, right, 1, 2, I can simply look for those buyers to get caught, and I can use their stops as fuel for a failure back down to retest the low. That's kind of the point I want to make on this. So watch as this thing, if it does start to roll lower, be aware of how that new channel may come out. One of my favorite kind of continuations of these, if we do start to roll over or roll lower, is to go out and look for those prior swings, get above those prior swings, because that's where the best entries will usually be. Get above the moving average, and this is where you pretty much have the pick of the litter at this point, right? That channel is not nearly as wide, it's not nearly as flat. I can look for a trap above a prior swing. I can look for a failure above the 21 moving average, and I can also grab that pullback setup as we roll over and try to retest that low. Once we do retest the low, then do we see a breakout? Do we see a bounce and go higher? I'll talk about that reversal pattern here in a moment, right? So keep that in mind here as we go. It would also be worth mentioning as well. Let's say, for example, we do get that big, that kind of rolling lower here right now. And let's say, for example, we find a new channel. Channel looks great. We've got our swings all lined up. But then for whatever reason, the market goes bonkers, right? And just blasts and run higher. This will now be kind of the same idea as we mentioned before. There'll probably be some bigger channel out here, right? Makes sense, right? So now I kind of widen out that channel. So if you see this thing really bounce hard off of that low, and it makes sense, right? Because we're so low on these charts right now. We haven't seen any really deep, significant pullbacks since we saw that big move down on Tuesday. So there's going to be, we're susceptible for that big spike going higher. We're still an overall bear market. So find that larger channel. And then remember, just like on a wide channel, because of the strength of this move going higher, you really got to think about now, again, more buyers coming in to try to punch this thing higher here. 1, 2, rope in those buyers now, use their stop losses as fuel. And then number 2, as these markets drop, this is where the easier stuff now, right? Now go out and find that channel, mark off that high, grab that first test off that channel. In all reality, we hope for this, right? In all reality, that's the best possible scenario for tomorrow, because now we have a huge amount of reward for potentially a very small amount of risk on that deeper pullback. So keep that in mind here. Even if we do get a new channel, even if that channel does get tighter down here, watch out for that big blast stop, trap in those buyers, think about where their stops are and sell right into those stops. You'll see a lot of examples of those, don't you worry, as part of that free class that I mentioned earlier. And then as it rolls over, I'm keeping things simple right now, but find the trap, find the failure, find the pullback combo, and then where's the target? It's right back down to retest the low. Okay. Now, remember, also too, keep in mind, if we do go lower and then blast and hold off that pullback and jump, right? That is a reversal. That's a 1, 2, 3 reversal. I want to look for that new channel, grab that first pullback for that retest of the high, and then once they retest the high, 1, 2, dump it back down with a 2-try failure, grab that channel and go, right? So not a lot changes, but if we do get that reversal, there likely will be money to make on the buy side. Remember, though, the better odds are the sell side. So if you don't get a good signal off the low of that channel, just wait for that double top and then wait for that 2-try failure and drop it back down. And if you don't know what a good signal looks like, that should be a good sign right there, right, to grab that link up there, take the free class, learn the basics. That way you kind of know what a good signal looks like. And you know what a bad signal looks like as well. One last thing here we'll talk about here on the S&P, which again will also apply to the NASDAQ. What if we get that run higher? What if we get that 1, 2, right, that back down to retest the low? Can I buy this area? You can buy it, but again, we're very bearish right now. We know we have a strong move down for both the NASDAQ and the S&P. Once they retest that low, that's, as we always say, mission accomplished, right? Mission accomplished. Once they retest that low, now we've got all the professionals who sold high, right? They risk small to earn large by selling high. And now we have the rookies coming in, right? These are the weak hands. These are the inexperienced traders. Let them wrap that noose around their neck. Remember, we're bearish right now. Momentum's a very big part of how we trade in our trade room. And once those bears try twice, all their stops are a sitting duck right above those highs, and we can look for that 2-try reversal going back higher again. Now, where do the buyers want to go? They're going to want to go back up to take out these highs. Once they get back to those highs, what can you do? You can short it, but wait for the buyers now. 1, 2, right? And short that sucker back down again. Think of it like one big trading range. Make sense? Right? Pop it up, sell off the high, drop it down, buy off the low. If I could only choose one side tomorrow, what direction would it be? It'd be the sell side because of the overall bear bias. So now we have a good plan here now. If we have a wide channel, like we do right now, if we have a trend line coming up off that low, and again, if we do end up going lower here, how to find that new channel, steeper channel, and we can be a lot more aggressive with failures off the high of that new channel. Make sense? What do you think? Let me know your feedback. I'd love to know what you think about this market in the comment section below. As a trader, I always appreciate hearing different opinions, so definitely don't hold back. I'd love to know your thoughts in the comment section here below. Let's keep going though. How about some crude oil here for tonight? Over on the oil. The oil, don't forget, we do have a rollover reminder for tomorrow. This is the 10/22 contract on oil. We are looking at a rollover to 11/22 contract tomorrow. It will likely happen tomorrow. I would be surprised if we had to wait until Monday. So be aware of that. Check your volume tomorrow morning when you get to your desk. If the volume's higher on the 11/22 contract, make the switch and trade the 11/22. And if you mess it up, there's no real big problem. It's just it'll be pretty slow tomorrow once rollover happens on the 10/22. Second big clue here is a bear bias, right? Big bear move down. Look at a daily chart. Look at a 4-hour chart. You will see the long-term bias is bearish, and of course the short-term bias is bearish. What's up? What else do we have here? Strong move lower. Anytime we see a strong move in one direction, what do we expect? We expect a deep pullback, a retest of that low, right? Buyers will come in to buy that bounce off that low. Or we get that breakdown and we try to make that move down to potentially 83.65 is a major support level. Next big level below us, though, if we can crack below 83.65, 81.20, 81.20, 81.50. That's where these sellers would love to get at some point tomorrow. Be aware, though, 83.65, look at a daily chart. You'll see what I mean. 83.65 is a very, very big support level there. So we'll talk about the breakout going lower here as well. And then nothing new here, a support trend line. You see it right there? Notice how we go lower, we pull back, we don't retest that low, we go higher, right? That trend line comes in. We talked about this already a couple times already, so you guys should already kind of know what the game plan on that is. So those are the four, it's really three key insights here on this oil. The game plan is very, very simple, right? At this point, now that you know how to do it. As we go higher here, I want to be a seller. I've got some great areas up overhead here. The problem, though, again, is that trend line. So as we go here now, and the moving average comes up off that low, remember, I want to be a bear, but I have to trap in the buyers. I got to sell as high as I can. And the only way to do that is with a trap setup. By definition, traps are ideal for whenever we're trying to sell as high as possible, because by definition, it's getting me in above that high. Then, as we get underneath it, as long as we haven't retested that low yet, okay, this is the most important part about that pullback entry. We have to get that pullback entry before we retest those lows, okay? Because once to retest the low, what is it? It's anybody's guess where we go from there, right? It's mission accomplished. Right now, the objective is to go back and retest that low. I want to look for that trap high, right? That two-try. It's a two-try failure with a trap because we have that trend line, and then again that trend line bounce from there. Or maybe this is the day we get that reversal. Maybe this is the day this market pops up, holds that pullback, jumps off the moving average and rips higher. If we jump and rip going higher, where does the market want to go? It'll want to take out some of these prior highs up here. We're going to mark off a trend line. We're going to mark off that channel. We're going to drill down to find those prior swings, and we're going to grab traps below prior swings. My favorite, failures below the moving average, most common, and then of course that pullback combination, right, as we go back up to go higher. Remember, anytime we see a real strong move in one direction, we expect a retest of that high. Trap, failure, pullback, grab that retest, and then what? Same plan, right? Buyers try once, buyers try twice. Where are their stops? Selling right into those stops, and then finding that new channel off that low, and then grabbing that short off that new channel. And again, keep in mind, right? This could be all the way up here, right? We might go up, pull up, get that channel, right? They go up, retest. Okay, we're buying those scalps off low of that channel. We're getting that retest off that high. Moving average comes over, same thing. Trapping the buyers who are foolishly buying way too high at that point. Use those stops as fuel and get this thing to roll over and grab that channel. As I mentioned a lot in these videos, you may not get that beautiful reversal. You may not get that two-try reversal off the high. It's okay, right? Sometimes you don't get it. If you don't get it, don't miss that pullback, right? Don't miss that pullback. That is one of those must-take trades. My job as a trader is to grab that channel and take that first test, whichever entry setup we get tomorrow morning in our trade room. So keep that in mind here. If we do really blast higher, retest, two tries, sell at stops, and then grab that channel as we go here. Also too, same thing here, right? We may not have that trend line there very long, right? The market may roll over and go lower. If the market rolls over and keeps going lower, which is very, very possible, we got that 83.65 level, which is a huge level. If the market rolls over and keeps going lower, at this point now, we're simply going out and adjusting this channel. I'll draw off that low, I'll bring it up off that high, right? And then again from here, I'm trying to get up. Now, because of that 83.65 major low, the bounce off this low might be pretty significant. As I mentioned before, the stronger that pullback is, the more disciplined we have to be to let those buyers come in and kind of dig their own grave, so to speak, right? We need to use their stop losses as fuel for that move going back lower. So buyers trying once, buyers trying twice, where are their stops? And then again, selling right into those stop losses, grabbing that roll going lower. And if we have enough space on, remember, they want to go back to retest that low here, finding that new channel and grabbing that short off of that, right? Off the high of that channel, right? Does that make sense here? Okay, so as we go lower, same thing. Waiting for that nice deep pullback, letting those buyers, right, try to buy it as it pops up and then sell right back down into it. The easiest money you're going to make in any market, right? This is the crude oil. In any market is when you have a long-term bear trend and you got buyers who are trying to pick that bottom and trying to catch that reversal. That's the game plan for us if we keep going lower here. Last but not least here, if it does go sideways, tomorrow's quad witching. If we do end up going sideways here, not a lot changes. Ranges, of course, act like magnets. The most important thing that you want to think about when it comes to a range is that, and again, this will also apply to the S&P and the Nasdaq, they're pretty easy, right? We find levels of resistance up above. We wait for the breakout. Ranges, of course, again, they act like magnets. And so bear bias, trading range, we look for buyers to come in and try to buy. We won't need to be as careful at that point because the range below us will be a pretty easy magnet. Wait for those buyers to come in and get long. Once they do, think about now where their exits are, and we can sell right back down into that trading range. Remember, when a market pops above the trading range, the amount above the range and the amount below the range can be used as a target. So target 1 at the low of that range, target 2 or target 3 for a runner is all the way down at the pendulum swing. So keep that in mind if we do go sideways. And again, this technique can be applied to the S&P and the Nasdaq as well if we do end up going sideways here as well. Again, watch those trend lines though. The trend lines are going to be the variable that may be one of the biggest kind of traps we fall into here tomorrow. One last thing I'd be aware of. One last thing to keep in mind here for a range. One of the more challenging types of ranges is when we get something like this. Let's say we go sideways here overnight. Again, this could also apply to the S&P, the Nasdaq. Now, let's say we break out lower and then go higher. We talked about this scenario last night as one of the most consistent reversal setups that we see. What happens is the range, of course, is a magnet. We try to break out lower. The bears fail. I don't know, right? Maybe they bounce off that 83.65. I don't know what might cause that. Nobody knows what's going to happen tomorrow. That's why we plan our trades so we can then have a game plan no matter what we get tomorrow morning when things go quick and our emotions are firing on quickly, right? So if we do head fake off that low and then slingshot going higher, the word slingshot is a very good word for this because momentum really, really turns. Now, can I sell this? You absolutely can because we're still a bear market overall. But you have to remember now, this is exactly where that 2-try failure comes in. 1, 2. Don't get too aggressive selling that because, again, all that momentum coming off of that low, buyers try once, buyers try twice. Don't forget lower lows, right? For those 2 tries. Always buyers want to buy low, lower low. Once they try twice, you got them. You got them right where you want them and simply sell right back down into that trading range. And again, don't forget, the amount we went below the range can easily be used above the range, right, to find a key level of resistance. Okay, I should have mentioned that earlier. I apologize, right? So if we end up going below that trading range here, right, we make that move below the range, take the amount below it, pop it right above it. That gives you a level of resistance to work with. And then again, we're still going to worry about the momentum, right? So 1, 2, and then sell back down from there. All right. I know my squiggles here a little bit messy here. It's a Thursday afternoon after all for Friday. So hopefully that makes sense to you. Let me know if you have any questions in the comment section. Again, tomorrow could be one of those days where we really have to pick our spots wisely. So watch those wide channels on the Nasdaq and the S&P, right? Watch out for that steep bounce on the crude oil tomorrow. And speaking of tomorrow, don't forget, tomorrow morning, every morning, 8 o'clock Eastern time, we'll be in our trade room. I would love to have you there learning and trading right along with me. I would recommend, though, if you're watching for the first time right now, take that free course I mentioned earlier. I'll put all the links linked up in the description of the YouTube video. Grab the free course first, learn the basic strategy, get making money on that on your own, and then you'll be all geared up and primed for trading with us every morning as a student and a member of our morning trade room. If you have any questions, any trouble at all getting access to our courses, don't forget to call the office. We're always here to help out every step of the process. And if you guys have any questions too, you can use live chat, and you can always drop questions in the comment section below. All right, guys, hope y'all enjoyed the video tonight. Be careful tomorrow. Remember, pick your spots. Don't force bad trades tomorrow. And again, if you don't know what a bad trade looks like, take our free class, learn where the good stuff is, and I'll see you sometime soon in our trade room as a brand new member. Tomorrow morning, if not, we'll come back next week at a big week next week at a Fed meeting on Wednesday. It'll be a busy week next week on this video and, of course, in our trade room. But guys, that's all for tonight. That's all for tonight. Enjoy your evening tonight. Get some sleep. We'll see you tomorrow morning at the opening bell. If not, we'll see you guys back next week on our next edition of our video newsletter. My name is Joseph. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.